Unlike output VAT that you charge, input VAT, you suffer it. I know that you don't want to suffer. We are all Nigerians, but that's not the suffer I was referring to. You bear it. You pay input VAT to other people. Think about it this way. Everybody selling goods or services, every entity is required to charge output VAT, right? Based on what we learned in the last episode. Now, except their goods or services are exempt, right, by the law. Now, think about it. When everybody charges output VAT, everyone who bears that VAT, right? You know, they are charging someone. Everyone who bears that VAT that everybody has charged, or every entity, has suffered input VAT. So that's input VAT. Unlike output VAT that you put on your invoice and charge to the party transacting with you, input VAT, you suffer it. Again, you bear it. If you don't like the word suffer, but you bear input VAT. So that is what input VAT is about in a nutshell. We are focusing this episode on input VAT, and I remain Oladejo Adeyemi. So when is input VAT incurred? When you transact. And that's why VAT is transaction tax, right? When you transact. As long as you transact with one another, input VAT is going to be incurred. Parties incur input VAT when transaction happens. So you have bought a table, you've bought a chair, the seller had added VAT to that table or the chair. That VAT that you are paying to the seller, remember, you are the one now paying that VAT to the seller, is output VAT. And that is where we talk about the output-input mechanism. Because they need to speak to themselves. They need to speak to one another. The same person who is required by law, the same juristic person or the same individual or entity who is required by law to charge output VAT will also would have borne input VAT to source for its raw material. That's the way it works. And every business owner must understand the interplay between these output VAT and these input VAT. Now, let's take it even deeper. Is it every input VAT that I suffer or that I have borne that I can claw back? At this point, I would have to use an example. If I have charged output VAT on a product that I sold for a good that I sold for 200 naira, at 7.5%, that would give me VAT of 15 naira. I charged that output VAT to a customer and I collected 15 naira in addition to the cost of the goods or the selling price of the goods, meaning I collected 215 naira from the customer. Of course, barring any deduction of withholding tax. Let's keep that to the side to make it simple. Now, in the manufacture of that product that I sold for, that the selling price was 200 naira, I bought raw material that was worth 100 naira to produce that good that I sold for 200 naira. And I also bought VAT of 7.5%, remember, on that raw material that I bought for 100 naira, meaning I paid 107.5 naira to the seller that sold the input to me, that I used to produce the goods that I sold for 200 naira. So that 7.5 naira that I paid was my input VAT. Now, because I have used the input to produce another good on which I am charging output VAT, that I have charged output VAT of 15 naira, the law is that I deduct my 7.5 naira that I suffered at the point when I bought the raw material from the seller of the raw material. I deduct that 7.5 naira from the 15 naira that I collected from the person that eventually bought the finished goods from me, so that the excess of the 15 naira is what I remit to the government. If you follow this simple principle, these things can never be confusing. It's always important to understand how they tie together so that you will know what is required of you as a business enterprise. And that's why transaction tax is not your tax. You are only fulfilling an obligation that the law has bestowed upon you. Now, what if I suffered input VAT on capital item, on an asset that I want to use? The law is that, the law as we currently have it, remember, emphasis on that, is that you capitalize that VAT with the cost of the asset and you claim capital allowance on it. If you don't understand what capital allowance means, you need to go back to some of my videos, go and check my channel. You're going to see those episodes there. We took our time to explain the concept of capital allowance. Again, I have suffered input VAT on services. The law is that you cannot claim that against your output VAT. The law, as we currently have it, that is what it is. By the time we talk about the changes, you will see how much of these things have changed come January 1st, 2026. The promise has always been to keep it short and simple. So we are going to draw the curtain here. But now you should know everything that relates to input VAT and what input VAT means. The input VAT is the VAT you are suffering or you have borne when you buy raw material from someone else to produce a good, that you are selling, on which you are also going to charge output VAT. If it is not deductible, you send it to your P&L as an expense. If it is on fixed asset, you capitalize it with the cost of the asset. If it is deductible, you deduct it from the output VAT that you have collected from the eventual buyer of that good that you have sold. We draw the curtain here. I remain Oladejo Adeyemi, and I'll see you in the next episode. Bye.